everybody. Welcome to another episode of 10,000 Roads to Financial Independence. Today, I have our guest, Darin Batchelder, with us today. And Darin's a successful podcast host, and he is also a very successful multifamily investor. He owns a portfolio of over 4,000 units, and is also a very successful business owner in the loan trading business, which is what we don't often hear about. Welcome very much today to our show today, Darin.
Well, I appreciate you having me on. I'm excited to be here. It's great to see you again.
Yeah, definitely. So Darin, we're gonna start our questions like we always do, which is tell us a little bit more about how who gave you the most influence, or if there's a certain incident that gave you the most influence as you kind of growing up, that seeding the idea of entrepreneurship in your head.
Sure. So I grew up on the East Coast. I grew up in Brookfield, Connecticut, and it's I don't know, probably like an hour and a half outside of Manhattan. And my grandfather owned an aluminum business and in Newtown, Connecticut, and he was very successful. We would always do all of our holidays at his house, and he had a very big house and was well-to-do. And my father worked for him, and I always saw the value of owning your own business. So that's kind of what put the seed in my head.
Yeah, so basically kind of family business and etc. So growing up, did you know that you're gonna own your own business? Or just kind of stepping into your father or your grandfather's like step?
Yeah, I don't know why, but I remember from an early age. So both my grandfather and my father did very well with the family business. It did end up coming into trouble when the aluminum business consolidated, and it did end up going out of business. But when I was very young, I remember having friends say, "Hey, Darin, you're lucky. You're just going to jump right into the family business."
Yeah.
And I always had this thing in my head, and I don't know where it came from, but I always wanted to do my own thing. So
Right.
even if the business was still there, I think I would have gone off on my own. I wanted to prove, I guess, to myself and to others that it wasn't just handed to me, but I did know I want to own my own business.
Yeah, that's awesome. That's awesome. So growing up, did you ever had a W-2 job? I read the profile over here. You probably did.
Yes.
And tell us a little bit about that, and then what kind of prompted you transitioning owning your own business.
Sure. So I did what most people do, right? Get good grades, go to college, get good grades, go into a company, climb the corporate ladder. So when I graduated, I studied accounting at the University of Rhode Island, and then I went to work for Price Waterhouse. I got my CPA. I spent a couple of years with them, and then I transitioned to PepsiCo in their domestic and international audit groups. I got to travel the world, all over the world with Pepsi, and but I didn't love accounting, so I loved that I was getting to travel. I was loving that I was get to see international business, but I just did not like doing accounting. So I wanted to get into sales, and so I left and I went to work for a few different software companies. First, Computer Associates, selling financial software applications, and then a .com during the .com phase. So I got the accounting experience, then I got the sales experience, and then the tech bubble kind of burst. And I had a buddy of mine, I was living in South Florida at the time, and he kept telling me, "Darin, you got to get into the bond business. You got to get in the bond business." I'm like, "Well, I don't have any contacts there." And he kept telling me about the business, and one thing led to another. I thanked the man upstairs. It was just a kind of a fluke thing. And he ended up introducing me to somebody, and I got in and worked for a Dutch bank called ABN AMRO from 2002 to 2006. And it was, you know what? I was in the right place at the right time, selling what people were buying.
Yeah.
And I learned a ton and made really good money. And during that time, what I did well was, my wife wanted to buy the bigger house, and I said, no, this will end at some point, and when it does, I don't want to ever work for anybody again.
Right.
So I just socked away a lot of money.
Mm.
And then when it came time to leave, I had, I had the money set aside to give myself a chance to start my own thing.
Hmm. And then that probably has some relationship back to, like have a few seeing a few business, not that you're kind of directly involved in or indirectly involved in, kind of had its up and down. So decided maybe to kind of save it for the future. Yeah.
Well,
Um,
I always knew I wanted to start my own thing, but yeah, you're right. I mean, being in different businesses, I saw the tech, bubble, run
yeah.
up and then burst. And then when I was in the mortgage space, I saw real estate run up and then burst. And
Yeah.
so that, definitely formed something, but I always knew I wanted to go out on my own. I just wasn't sure what it was going to be.
Yeah, yeah. That's amazing story though, because you kind of shared some hardships of it that may be happening to the industry and etc. So these are really great insight. Like, how did you like? Because every time I talk to you, you're so positive and upward looking. How, and it was
Thank
surprising
you.
that you gone through like all these kind of downtimes. How did you kind of pick up where that burst happened or when the employment getting lost and the kind of moving forward with that?
Yeah, I mean that's a good question. Some of those things you could see it coming, and I'm sure a lot of your listeners, you're sitting in an industry, you're working for a company, and you could see the industry is changing, and
Right.
that the company is not doing as well, and that you kind of look at it and you're like, I don't think this is going to get better anytime soon, and so at that position, you have a choice. You have a choice to just sit there and do nothing
Mhm.
and let it happen to you, whether it be, you get let go in a downsizing, or you stay and it's just a market in an industry that's not growing and it's not fulfilling, or you can take action. So that's the biggest thing that I would tell your listeners. Biggest thing that I've learned and have had to force myself to is to take action, even if you're scared.
Yeah.
Fight through the fear and take action, because if you don't, then you're putting it into other people's hands.
Yeah, yeah, that's a great lesson. I love that. Okay, so then you started your business, and what's your first business kind of like specialized in?
So I left the bank in 2006. I wasn't sure what I was going to do. I actually started running around trying to look at buying some commercial real estate.
Hmm.
And it was just, I couldn't get anything to pencil. And so I got my handicap down. I played golf for like 6 months. Um, and then what I did was you know, when I was with AB and AMRO trading those large loan portfolios, I built up relationships with a lot of different banks across the country.
Hmm.
And I decided, I'm just going to call those banks and say, hey, if I was to start up my own thing, like as a one man shop, would you do business with me?
Hmm.
And you know, limiting beliefs, you hear about limiting beliefs. And one of the things that I was thinking in my head was, they're going to say no to me because I'm not with the large bank anymore. I'm just a one man shop.
Hmm.
But I forced myself to call, and I was surprised because the customers on the other end, what they told me was, hey, Darin, I do business with you all day long. The risk isn't really with you, it's with the other bank that I do business with. So if you could find me good quality loans to buy, then I would do business with you all day long.
Hmm.
We're just going to pay you a broker fee. And then the rest of the transaction is going to be between the two banks.
Hmm.
So that gave me confidence. And so in 2007, I went and started my own company doing trading loan portfolios between banks, residential, multifamily, and commercial real estate loans.
Gotcha, gotcha. And then for our listener, because this is not one of these very common jobs.
No, it's very, very niche.
What exactly does that kind of entails?
Sure. So let me go back to when I was with AB and AMRO. They were, that they're a Dutch bank, but in the U.S. they bought a mortgage company and they grew it, and they were a top 5 jumbo mortgage originator. but the bank didn't want to hold all those loans on their balance sheet. So, they started out by just selling them to Wall Street, and then they would go into securities. Then they formed this capital markets group that I was a part of down in Boca Raton, Florida. And what we would do is call on other banks across the country and say, hey, are you interested in buying these loans? And we would sell them at a markup from where they would sell the whole portfolio to Wall Street. So we were getting a better margin. So that's why they created that group. And so, one question that comes up is like, well, why would one of these banks buy, right? So say you've got a bank that is very good at raising deposits. They've got, retail locations and a lot of different locations. People come in, they have their business accounts, personal accounts, and they've got a lot of cash. But that bank may not be as strong originating loans. Okay. So they have all this cash, they got to do something with it. So they get the best yield, the best return if they originate their own loans. Okay. Another option is for them to go buy securities from Wall Street. So say the yield was like 5% on if they originate their own loan, and it's 4% if they buy securities. Well, we would sell loans and their yield would fall in between there. So maybe the yield would be 4.5%. So the bank buying the loans would get a better yield than they would buying securities, but they wouldn't get as good as if they originated their own loan.
Gotcha. So they themselves don't originate a loan, but instead they go servicing the loan because they need to put that cash that people have deposited to work. So
right. So they would buy the loans from us, and the reason why we would sell is we would sell them for a premium. So we would book a gain on that sale of loans.
So it's really a really great understanding that the buying party, what they needed and the metrics that they need to kind of hit, and then the selling party, what they're willing to kind of part away with these loans. Now, why would the company sell their loans then? Because if they're kind of making
they're selling the loans for a gain so that they can make new loans.
Okay, so that's usually institutions that maybe mostly doing the loans and that has less deposit or cash. So therefore they need to generate more cash to buy new loans and then make
That's it. So they one bank is really good at originating loans. Well, they're going to get tapped out at a certain point where they can't make new loans unless they sell some. And so they'll sell some at a gain. They'll book the gain as income, and then they'll have additional capital to continue to originate.
Gotcha. So it's really kind of like selling a product. It's like the product or the money, right?
Yeah.
For everything.
So I got into that space, and so then 2007 I started doing it on my own. And when I was with AB and AMRO, I was selling the loans they were originating, both residential and multifamily loans. And then when I went off on my own, I didn't have the loans. So it was dialing for dollars, leveraging the relationships I had to find banks that wanted to sell. And then I had relationships with banks that wanted to buy, and then I would connect them.
Gotcha. That's awesome. So it's kind of like dialing for dollar. Like if you translate in the real estate world, it's like a dialing for owners who will sell their property.
Doesn't matter what product you got to find a product to sell, and you got to find somebody to buy it right at the right price.
You had existing buyers, so which is kind of so half of the equations over there.
Right.
That's awesome. So, did you like when on your first year of business? The first year of business are usually very critical, and there's a lot of growth or setback as well. Could you kind of summarize it for our viewers, like the biggest lesson or two or three that you kind of learned from first year of business that you wish that you would have done maybe differently?
Well, I got you all the way up to the part of try to do something differently. I'm not sure that I would have done anything different. But some of the things that, set me up, one was, putting money away, so there's so many people in this world, that are unhappy in their jobs, but they're not taking the time to put money aside to give them a chance to go after something different. So that's something that I did. And that's something that I would highly recommend to anybody that's looking to start their own business is, look, you need to sacrifice now and sock away some money so that you have the flexibility to take a chance.
And then, so how much would you suggest to our listener to kind of put away, whether it's 6 month income or 1 year income, or maybe there's some other metrics?
Yeah, I mean, there's plenty of people out there that are financial gurus. You could Google that. I'm conservative, so like I like to sock away a lot. It give me a lot of running room. I knew I didn't ever want to go back.
Yeah.
So, I socked away a lot. But for different people, there's people have different comfort levels, and it also depends on how much capital you need to start your own business, right? So for me, it was a matter of, signing office space and getting some furniture to put in there. It wasn't a big upfront investment. But some other companies, it may be a lot more to get started.
Yeah, like finance space and etc. Why do you need offices? I always have this curiosity with that.
Yeah, so you don't anymore. Back I started, so I'm 51. You're a little bit younger than I am. So when I started, it was 2007. So what is that? 14, 15 years ago. 14 years ago. And there was still a little bit of a thing about people working from home, like they don't take you as serious, and also I was early in my stages with building my family. So when I was in that 6 month period before, when I left the bank and before I started the company, I was trying to work out of the office, but we had two kids that were like 2 and 4 years old. And I'd get off a call and I'd be like, honey, you got to keep the kids quiet. And she's like, they're 2 and 4, like they're running around, like, have energy, and all the toys are like, just around the corner from my office. It is very difficult to keep them quiet so for those two reasons, I got office space. But an interesting story related to the office, because a lot of people have asked me, like, what was the hardest part of starting your company?
Right. Yeah.
And I'm like, signing the lease to the office space.
Oh.
And people are like, what? Like,
Yeah.
was it a big financial investment? What, why? That doesn't seem like it would be that big of a deal.
Right.
And I'm like, because of fear. Like, up until that point, I knew I wanted to start a company, but I hadn't taken action to the point where I had to tell my friends and family. And so once I signed the lease, like, I was in business. I was going to have to write a check every month. I was going to go into the office and I was going to be going to work. And I had to tell my friends, my family, my ex-colleagues, hey, I'm starting this business. And there's the risk of failure.
Right. Mm-hmm.
That was the biggest fear.
Right.
Was not the financial commitment, but it was, what if I fail?
Mm-hmm.
And what was interesting was once I got into the office, and I started dialing for dollars, I'm like, this is the same thing I was doing over there.
Right.
Except for any deals I get, 100% of the profit comes to my company, instead of me just getting a commission and the rest of it going to the other company. Right. So, but that fear, I think, is what prevents most people from taking the step.
Yeah, I love it. I love it. I love that whole little short segment there. I think it's mindsets of everything, for sure. And so you started the business, but you also started investing. Now tell us a little bit about your investing journey over here. Um, like, did you always invest in real estate? Did you invest in some other form before, given that you have a lot more exposure to, various different investment types?
Yeah. So I wish I had started younger. I applaud you for gaining your financial independence and for teaching others, for spending the time to help other people. So I kind of grew up with that whole philosophy where people I don't know, I don't want to say brainwash, but like that's the way we were taught. Like, go work for somebody, climb the corporate ladder, put 10 or 20% over into the stock market, and then it's just going to grow into this massive next nest egg. And then you're going to retire someday and pull money from it. So I was under that. And, over the years, the portfolio grew, but it just didn't like grow to the point that I was like, astonished. I was like, you know what, that just, it just didn't grow as much as I thought over the years and years. And so, I still have the business Cheesy K Capital that I started in 2007, but in 2017, I said to myself, you know what, I've always wanted to own real estate. I'm going to take action. And so I didn't know how to do it, and it was scary. And, mindset wise, the first thing I could kind of get a hold of in my head was buying a duplex. So my wife and I bought a new construction duplex, and, that was October of 2017. And once I signed the contract for that, it was going to take a year to build. I was like, I'm going to make some money on this, but it's not going to be like a home run. It's going to take forever going duplex, fourplex, eightplex. So I went looking for a way to go bigger. And I ended up finding, multifamily mentorship group where I met you. And so I joined that group December 2018. And then December 2017. And then January 2018, I started to pull money out of the stock market and started to invest passively into multifamily deals with other sponsors. And then it took me about 9 months before I was awarded my first lead sponsorship deal. And then we closed it December 2018.
Yeah, that's awesome. And so I understand that like this is a little bit also different journey than most of people, because most people would buy like couple small single families and
Right.
they were buying another job, unless if they're having their PM working on it, but the margin, the profit's not as much. And then they get into the multifamily space. So you kind of jumped right in, aside from that first duplex and seeing the opportunities there. So what would you tell us, like, do you feel like you kind of shortcut it in a way that you accelerated getting into where you wanted to be, um, you know, by skipping all the single family, because you still own the duplex
Yeah.
till this day. So kind of now looking back to that, do you feel like that was definitely a right decision? You would have done it this way. Would you still, do the duplex as well?
That people have asked me, would you do the duplex? And people will reach out to me on Instagram, like, what should I do? And I'm like, part of it is mindset, right? So like, for me at the time, all I could see myself doing was like a duplex or something like that, because I felt like it was less risky. I felt like it was something I could tackle. But then once I did it, I'm like, this is just going to take forever. I need to figure out how to go bigger. And the big difference with joining the multifamily mentorship group was, I had been trading multifamily portfolios for years. I knew the asset class very well. And I had a lot of banks that loved multifamily, and that was, and it performed very well in a lot of different economies. So that's what attracted me to it. But, it was really surrounding myself with other like-minded people.
Yeah.
When I got into that mentorship group, and I was like, that the person just did a 120 unit deal. They just did a 250 unit deal. That did 175. They've done 4 deals. And then look, they're all great people. And I've met so many fantastic people, and this is not to belittle those people. Right. But I'm like, if they can do it, I can do it.
Right.
And I think that that's what you're doing here, is you're telling other people, like, there's this other world out there, and it's not just for the people that are there. There's the opportunity to get involved, and it is a bit scary, but when you see all these other people that have been successful, and you're like, they did it, I just need to understand what steps they took and then mimic those steps.
Right, right. Yeah, absolutely. And I think you hit the nail on the head right there. And then my understanding is you actually invested more than 10, 11, basically passive investments over a short period of time. And you took action. You took like massive action in terms of committing to that cause. So through all these passive investments, what would you say? Can you kind of describe to us the learning? Because oftentimes I have people ask me is, hey, should I passive invest? Like, am I going to learn a lot of stuff with, multifamily investing?
Yeah.
Tell us a little bit more your experience with passive investing.
Yeah, I would recommend, anybody that wants to go active at some point to at least invest in one passive deal. And the reason why I tell people that is because I remember how I felt, that first passive deal, and I had the capital,
Right,
like I had the capital to invest in 10 deals. In that first deal, I was still scared.
right,
you know I- and I got a lot of advice from people, and I met the sponsors, and they had a great reputation. And I remember the day I wired my money,
mhm,
and I sent a um, text message or email saying, hey, can you confirm receipt of this? I just wired the funds, because in my bank trading days, that's the way deals would settle. Um, and it might be a $50 million portfolio, but it would settle one bank sending a wire to the other bank, and then the receiving bank sending an email confirming receipt.
right,
So because of that, I figured, okay, I'm going to wire, 75 grand, and I'm going to just send an email saying, hey, confirm receipt. And I didn't get a response,
oh,
like no response. So then I'm like, oh man, my wife's going to kill me if I just wired 75 grand to like Never Neverland. Right. And so then I sent a text, nothing.
yeah,
I'm like, holy cow. I waited about an hour. I'm like, all right. I call the sponsor. Sponsor picks up. Hey, Darin, you know what? I don't find out. I can see the deposits,
yes,
but I can't see who it's from until the next morning. The
right,
bank sends me the detail. And so at that point, I'm like, okay, so tomorrow morning you'll send me. And I'm like, okay. So, overnight, I'm still a little,
yeah,
wondering. But in the morning, I get the confirmation. Well, once I knew the process
right,
and it came, forward, and it all worked out, then I was comfortable with it. And
right,
so when I did my first syndication, I told all my investors that,
yeah,
because I was using the same bank. I'm like, look,
right,
you're gonna wire the money,
yeah,
and I am not going to be able to confirm until tomorrow.
right,
So just know that.
yeah.
And that made them, a little bit more at ease, because they knew the process.
Yeah, that's kind of what we always do. We're just like, this is so important because, because you did wire a pretty substantial amount to someone,
Right.
and you expect it to be confirmed, and we'll tell them due to the bank don't let us see it until the second morning. Then I think folks will kind of like at ease, because
Right.
that was
They
my experience
they
of me.
understand the process. Yeah.
Yeah. Yeah, that's awesome. Now, you didn't do just one. You did like 11 of these.
Yeah. Right.
And among all your passive investment, like now you're a very seasoned passive investor. Um, what would you say some of the top things that come to your mind when, our people who's listening to it, maybe thinking about passive investing and want to dip their toe in there, they should still vet the deal. So what are some like top criteria you look for?
So, my decision process and a listener's decision process may be two different things. So, I knew my end goal was going to be, I really wanted to be a lead syndicator. So I wanted to be active. So with knowing that, I had kind of a two-pronged approach when I was looking at all my passive deals. It was, yeah, I want to make a good return,
Yeah.
okay, on my money, but I also want to learn something, that will help me as an active. So, I invested for different reasons. Like, so the first two deals, and this is completely funny. Like, it's it's a silly industry, the terminology that people use. Everybody talks in terms of like, I'm invested in over 4,000 doors, right? So so I was like, this is really dumb, because somebody could invest 100 grand into a 50 unit deal or 100 grand into a 1,000 unit deal. It's the same 100 grand, but it sounds better being invested in it. So I'm like, okay, well, I'm going to invest in some larger deals so that it sounds better. So that was my number one focus for the first two. I wanted to be with good people who had good reputations. And then I wanted a large unit count so that I could put it on my resume.
Right.
I think it's dumb, but that's the way the game is played.
Strategic,
So, that's what I chose to do. So then, I don't come from the fix and flip single family background. I come from, more of a financial background. So I saw this deal come across my desk from people that I liked, I knew, like, and trusted. And I drove by the property and it was ugly. I mean, there were all these cracks like down the side of the building. It was a mess. So I'm like, look, I'll invest passively, but I really would like to get an understanding as how you go about, hiring general contractors to come in and fix this. How do you go over the bidding process? What do things cost? What do you do first? So all of that. And, they were like, yeah, Darin, we'll get you involved. And I don't know about you, but I think you're invested in a number of deals too. The reality of the situation was, once the deal closed, they were too busy, to like handhold.
Yeah, that's why we set the expectations. Like, we will be very busy doing asset management because it's to everybody's benefit that we're focused on doing that. Only if you're a general partner, then you have the front seat row, that you definitely get involved with our operation. But also, we set the expectations to make sure that the managers still have the say, because you don't want to have too many cooks in the kitchen.
Yeah.
Balance.
No, I mean, I think I think expectation setting, and that's why I learned in trading large loan portfolios, setting the proper expectations is so critical. So, when we did our deals, I had plenty of people that came and asked me the same thing. Hey, can I go out to meetings with you? Can I do this? And I'm like, you know what? I felt the same way, and some people told me, yeah, no problem, Darin. But the reality was they were too busy.
Right.
And so I said, it's probably just not going to happen, so if you're investing to invest as a limited partner and get a return, and you're going to get the monthly updates, but I'm probably not going to have the time to handhold you and take you to meetings and all that. So you can decide accordingly.
Is for, and that's what listening to your podcast and etc. is for.
Right.
Yeah. That's awesome, because that's a dedicated channel for real education, but the passive investment does give you some more edge. So it sounds like, if I heard it right, is mostly you invested with people, and the people, it seems to be more of a focus, but also there's some uh agendas towards the goal that you want to be eventually active. So kind of collecting all various experience through passive investing.
Yeah. So, I talked about what kind of some of the reasons why I pick people, but, I get people saying, hey, how should I approach getting into my first passive deal? And, I break it down to, first, I think the first thing you need to do is decide what market you want to be in. So do you want to buy in Texas? Do you want to buy in Arizona? Do you want to buy in the Carolina? And I would highly recommend being in a attractive market, and we've been trained, and it makes sense to me to be in a market that's growing in population, growing in income. And, so you're in a growth market. So then once you pick the market, then find syndicators that do deals in that market, and get on their investor database. And, that doesn't, lock you into anything. You could get on 10 different investor databases, and, all that's saying is when they find a deal in that market, you might be somebody that they'll present it to as being an opportunity. And so that's a learning opportunity, so you then will register for their investor webinar and learn about the deal, and you still don't have to invest, but all of that is learning. And the more you do that, the more comfortable you're going to get. And then you'll, hopefully get comfortable to be able to pull the trigger.
Right.
So yeah, for me, the people is critical. I want people that have a good reputation of doing what they say they're going to do, doing the right thing, being stand up, knowing what they're doing. Because, if you're new to the space, this may sound funny too, but when you start getting all these, pitch decks and these going on these webinars, a lot of the deals, the returns look the same.
Right. Yeah.
From one deal to the next, so you're like, how do I pick? And for me, it's the people,
Right. And then also the feasibility of hitting these numbers, right? Because all the number that's project the same as you said, but how you project it, what's your business plan, that kind of leads to a different thoughts on that. And then more exposed to it, obviously you're more experienced. I bet you like right now when you pick a deal to passive invest, it takes you like 5 minutes.
Yeah, I still so I'm not picking based off of the number of units anymore. But I am picking off the people, so when I get but I like to have, two kind of another, like I'm investing in a deal now that they're buying an office building and then they're going to renovate it to be multifamily.
Yeah.
And so I'm like, I've never done one of those. I want to see how that works.
Right.
I want to learn from them doing it. So I'm going to be a passive investor in it. I'm going to learn from it. Maybe there's going to be some other opportunities that come my way that I might want to be a lead on something like that if I see that there's big opportunity.
Yeah, definitely. Now, what is from here on 5 years? Do you continue envision that you're still doing the TZK Capital, which is trading the loans, as well as doing multifamily? Like, what is the kind of the 5-year goal for you?
Good question. So the business model kind of changed a little bit on TZK Capital. So when I got involved in real estate back in 2017, 18, the business was running, pretty efficiently and still is. I shifted a lot of my focus over to the real estate side. And so if I look out 5-10 years, what's cool about real estate is that really the only upside is your mind.
Yeah.
Where most other industries I've been in, you see like who the top players are, the top salespeople, the top whatever earners, and you want to get there. But then once they get there, it's hard to continue to spike it up. It's hard to, all of a sudden January 1 comes around. It's like, what have you done for me lately? You got to start all over. Right. But in real estate, it's like, okay, you're doing multifamily, maybe you're doing 100 unit deal and then a 200 unit deal and then a 500 unit deal. And then you do a portfolio of, 3 properties for 1,200 units. Then I'm like, why, I drive by major shopping centers. Why can't I be a part of that?
Right.
Or like, look at Manhattan, huge skyscrapers, like, or massive resorts that you've gone on vacation on. Like there's no ceiling, it's all up to your mind, what you think that you can achieve and then go after. So for me, I met with a life insurance guy and he was like, all right, let's work backwards from when you want to retire. I'm like, you know what? I don't know that I want to retire. Like,
already retired if you want to. Yeah.
Like I want to do, maybe I want to do 2 deals a year and just have them be bigger deals, I think that when people retire and they just go sit on the couch, that's when, they lose their life. I love helping other people learn how to get in the game. I love what you're doing, teaching other people, because, there's so many people that are just unhappy, and life's too short to be watching the clock the whole time.
Yeah, yeah, I love it. So, and then so you have a podcast. How does people kind of check out your podcast? So, by the way, Darren's podcast has, I don't know how he land these guests, but all his guests are super like, predominant in the industry. And it's Darren. Can you tell us a little bit more about your podcast?
Sure. So best way for people to find out about it is go to my website, darinbatchelder.com. And, it's focused on bringing on very successful real estate investors and then learning from them. And I'm just like the listeners. I get to ask questions and learn from all these people. And, one of the things that's really interesting that I've learned from interviewing all these people is a lot of them didn't start out with a lot. A lot of them, they, as a child, they had in their mind, my life's going to be different, and they uh, put money away, they socked away, they sacrificed so that they could build something, but they believed in themselves and they took a chance.
Yeah, that's true. I think I find that pattern because there's a confidence of they created the empire now. So should they fail, they just have to create it again. So the formula, they got it. So I think it's the skill sets and then also that props the confidence and the mindset to be able to kind of recreate or create. Um,
And I think that, you interview a lot of them as well. Like, I think that what's interesting too is, when I meet them, they're already successful, right? But when you dig underneath, like when they started, a lot of them had some trials and tribulations, and some of their first investments may not have gone as well as they thought, and they learned from that and moved on. And that's one of the things I have some friends that will reach out and they saw me that I've been in business for a long time. They're like, I want to get my own business. And I'm like, just do it.
Right.
Like there's so many people that they start and maybe that business 3 months in is not going to be the big success that you thought, but you may all of a sudden see a different opportunity that, and had you not taken the chance, you never would have saw that opportunity. So now you pivot, you go to this other opportunity and boom, that one's successful.
Yeah, yeah, that's amazing because it's experience that you accumulated. Um, all right, so we'll come down to the end of the interview over here, and then we like to kind of cap our show with kind of full circle. You have two young two kind of not young anymore, yeah. So two, but still young kids per se, to compared to us, obviously they're much younger. What are you doing? Actually, this is great because what are you doing throughout their growth so far to kind of infuse the idea of entrepreneurship and then like a financial literacy?
Yeah. So my kids, my son is a sophomore at Texas A&M, and my daughter is graduating next Saturday from high school, and she'll be going off to college. So with both of them, and I credit really the real estate group more than anything. Yeah, I started my own company back in 2007, but when I started that company, look, sometimes entrepreneurship can be lonely. You're out on an island, like nobody is there. But in the real estate world, I've met so many people that have built, ton of success and ton of wealth, but everybody's sharing with each other. People partner together a lot. And so, my thing with my kids is that you want to be owners. Okay. You want to own something, you want to own ideally cash flowing something, cash flowing real estate, cash flowing business, something. Here's another thing about the W-2 employees, the people that are, they could work there for 10, 20 years. And it doesn't matter if they get let go or they retired or they sell the business or they merge with another company. If they don't have a job, they have nothing.
Right.
They don't get anything for it.
Right.
But if you start a small business and then you grow it, and then 10 years later, you want to sell it.
Yeah.
Well, if it's profitable, you're going to sell it for a decent chunk of money, you know? So you're building something that has value versus, you know, just trading time for money. And then when you leave, you know, you don't get anything, you know, to go forward with.
Yeah. Yeah. That's amazing. Great advice. And Darin, again, we're going to put your website on the show notes over here. So guys, definitely check out Darin. And obviously he come across as a very level-headed person for me. So obviously definitely check out also his project as well that he's working on with multifamilies and etc. Because I know like if I was to invest with someone, I want to invest with someone who's level-headed and risk averse as he is. So that's awesome. Well, Darin, thank you so much for our show. And once again, can you tell us your real estate podcast show, which
it's really unique. Darin Batchelder's Real Estate Investing Show.
Awesome. That's awesome.
You can find it on all the major platforms.
Yeah, and then he's got amazing guests such as Rod Cleef and a couple other like really famous real estate investors in his show as well. All right.
Thank you so much for having me on. It was fantastic to spend time with you, and I wish you much success.
Thank you so much.